Hey, good morning, guys. Uh, Happy New Year. I know I'm excited to be back, and I appreciate everyone's patience and understanding with me as we take a couple of weeks off here and digest and spend some time with family away and just kind of resetting. And it's always nice to come back and take a fresh look at the charts. And I try to do this intentionally. Uh, periodically just so we can try to maintain that fresh perspective. So what we're going to do is take a look at beans, corn, and wheat with fresh eyes. So this is the first time in the last 2 weeks that I've sat down in front of my screens and really looked at things. So I'm going to give you a completely authentic look at exactly what it is that we're seeing. So as we look at March beans here, the first thing that jumps out at me is that that we have broken solidly above the $12 mark and above this resistance back here, and that our MACD index is at new highs, and so is our force index. So everything about this move has tremendous strength behind it. It's very impulsive, and nothing about it um, looks like a selling opportunity on this chart. Yes, it looks like we've broken 13. We've rallied an awful long way from the bottom. But guys, just because the price is high, that does not mean that it's too high. So we got to look at what's happening fundamentally too. Over the last 2 weeks, since I shot the last video, we've had nothing but bullish fundamentals continue to confirm. We have weather issues in South America. We have dryness and weather issues forecasted here out into next summer. We have demand that is just off the charts. To put it in perspective on the demand side, um, China is on pace to crush more than 7% above their all-time high. Now, let me quantitate that back to bushels to you. They're on pace to crush more than 1 billion bushels of soybeans more than at any time that they ever have in history, including 2010, 11, and 12, when the last real demand-driven market got underway. So the fundamentals are absolutely lined up here to be powerful. Second, the crop in South America is delayed, which is pushing more demand our way for a longer period of time than what the market originally thought. And third, this is all happening at a time when our balance sheet is tight with a good South American crop in play. So if South America comes in with a smaller crop than what the USDA currently has, then guys, this thing can get much, much higher than we already are. So let's back out and look at what's happening on the weekly chart, because I see nothing here that would give me any pause whatsoever other than just to hold, because there's nothing here that looks like we might sell off. Um, uh, I just see nothing or any indicator that's indicating or suggesting a top is in place. Let's look at the weeklies and see if we can uh, uh, get some clarity there. It doesn't like what I'm doing here. Hold on. W week. Okay, here's our weekly chart of beans. I mean, you could take a look at this and say, oh my gosh, this is just completely parabolic. But think about what we've been saying for the last several months, okay? This is all the way back to 2016. We've said this for a long time, that if we break to 950, we should move up to this 1060, 1070 range, which we did. We then consolidated. We broke both of these highs back here, and we went straight to the old high at 1209 and 3/4. Man, this market didn't even hesitate. It just blew right through it. And what are we doing in a longer term perspective? We blow right through this 1209 level. We went straight to 1250, 1260, which was this resistance level right here. We've now blown right through that, and we're coming up to the top of this congestion zone, which 1350, 56 is really the next level of any type of resistance on this chart. And if we blow through that too, guys, $14, $15 is not out of the question yet on this move, and this could just be wave one. We've got no divergences on your MACD, no divergences on the force index. Um, there's no reason to think that this thing won't continue higher here for a few more weeks and come test this 1350 mark, potentially even higher up into this $14 area before we get into a significant selling range. And that's just by a simple eyeball look at where support and resistance was on this chart. If you look at this little congestion zone right in here, you've got 1389 to the peak of this bar right here, which is 1448. So I think you got to just look higher on beans until something changes. And what will that be? Well, I guess if China decides they don't like us and all of a sudden they don't need beans, or all of a sudden South America has a above average crop and we need to revalue everything, I guess that can happen too. But and remember, underpinning just the grain fundamentals, and this is what I think most people in the grain industry are missing, is that the dollar is doing something truly historic, and we're being devalued, and we're coming back into this sweet spot in the 80s where the dollar index makes us very, very attractive and is implying inflation. So if you do homework and you look at where commodities are priced relative to other assets globally, they are the cheapest asset class to buy. So oil at 40, corn at 450, beans at 13, these are all relatively cheap levels compared to where the dollar is trading. And if we truly get into something inflationary, then we may go up significantly higher from above where we are. So yes, we can pull back. Yes, we can sell back off. I think that's a reloading opportunity, not a oh my God, the top is in and we're going to go back and trade something different. This is much more like 2008 than it is any other time period. So the idea that we're going to have a V top here anytime soon is, I think, just a wrong way to look at this thing. All right, let's look at corn. Okay, so target area March corn. Let me take some of this stuff off here and reshape this thing. Again, it's the first time I've looked at this chart here for since I left and went on vacation. So let's take a look at what we've got. Take this off, get a real clear, fresh look, okay? First things first. What do we have? Well, this 13 jumps off the table, jumps off the screen at me, right? This is an extremely powerful bull market. We've had 1, 2, 3, 4 13s, but each time we get them, we just keep on going. And no different here. We've already invalidated this 13 off of today's trade action by penetrating this 481 level. So in March corn, there's nothing about this that is telling us to sell it. That got negated here with strength in the overnight. Our MACD is at a new high. We're just cranking up. Our force index, we have a small divergence here, but with an invalidated 13 and an MACD working higher, I think that even invalidates it. Now, maybe a little bit concerning is the fact that we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 green bars in a row. That's a lot. We're going to get a down day. We may even have a pullback. But given these readings, that pullback is nothing more than an entry point to continue working higher on this daily chart. This chart looks really, really good, and I see no reason why we can't go get a fifth 13 on this chart. Let's back out and look at the weekly here on this one and see what it's telling us. Oh yeah, there's no divergence on force index. There's no divergence on the MACD. Yes, we're vertical, we're straight up, but let's look at what we're doing though. Um, uh, I'll pull this back here just a little bit more even. Look at where we're at. This is the high of 2019. We talked about this when it came up through here. We broke through 410, which was the 2018 high. We broke through the 17 high, and we broke through the 2016 high. We stalled, and we got a little bit of a running start to get above this 2019 high. Guys, this is our next stop up here at 520. There's nothing on this chart that would suggest that we won't see that. I'm not saying that we can't turn around and reverse and go lower, but I think the entire trade is looking for this whack-a-mole action to happen here, where we get up into these levels and we get a headache. We get up here and we get a headache. Boom. We just keep doing that, and that's been the case since 2014. I understand that thought process, but let's look at the fundamentals from here out into here. Each one of these years, we had good growing conditions in South America. We had good growing conditions here. We had the dollar was really rallying through this time period and not weakening. We had fundamentals that were a little bit different and were telling us that these were selling opportunities. Every one of those fundamentals has shifted, and this market looks, I'm going to do something here. I'm going to go back to the monthly chart. Here's a monthly chart going all the way back to 1986. Okay, here's your 2019 high. Here's your 2014 high. These fundamentals are more akin to this time period right in here. And I'm not saying that we're going to $8, but with South America in trouble, with China's demand increasing, if we get into additional weather issues and our carryout starts to drop, or beans go crazy because they're in a deficit and corn has to defend its acreage base, then I think you got to look up. There's nothing fundamentally or technically that is telling you that you should get out here and sell this market. I'm pausing here as I just kind of digest what's really happening. I think this thing's got a lot farther to go, and has no real resistance between here and 520. Honestly, 520 to 550 is more of a resistance zone than anything else. And from a marketing perspective, I see no reason, short of something shifting fundamentally, to start selling or hedging moving forward. In fact, I think long's the way you got to keep trading this thing, because it's just too strong. Now, if you go back historically and look at this move, most people missed it. We were up here before anybody realized that it had happened, and guys started selling prices, selling just because we're up in these areas. I know it's profitable. I know that the last several times we've been at this area, I know that all these things are completely true. But that doesn't mean it's the right reason, that there's a reason to sell it this time. There's fundamental differences between each of these prior peaks that that would tell you that this market is stronger than it was before. Now, I'm not going to say it's different this time, because that's a trader's. It's fundamentally different in the fact that on any of these spikes, number one, we couldn't hold them. Number two, the dollar was much higher. It wasn't in a big downtrend, and South America looked much, much better than it did here, and we didn't have any shortages like we have in the rest of these markets. So Looking forward, I see absolutely no reason to do anything but be patient and wait for the market to tell us to do something else. So we're definitely bullish and looking up. All right, let's look at Kansas City wheat. Maybe it'll be bearish. There's our daily chart. Again, it's the first time I've looked at it here in a couple of weeks. I would say it's the laggard, right? We've got a little bit of a divergence off of here. Now this has not confirmed as a divergence. So the hesitation is we just broke this TDST line. We just broke out of it yesterday. We've held it. We close up in here today. There's no reason to think that this doesn't continue. I think you got to stay long this market. I see no reason to be defensive about it or short it. This isn't a divergence down here off of this move. You got a small divergence off of this big move down here. But the fact that we've broken up out of this tells you that you got to stay off to the side or stay long, because you have no reason to sell it until you get more confirmation or more of a sell signal. If the fact that we've broken this line tells me that we've got at least another 13 days of successive highs, and if that's followed with increasing momentum, then this could very easily not be a divergence. So I think, like the others, you got to just keep going. And like with corn and beans, wheat's fundamentals are less bullish, but they've been the leader from the beginning in terms of the wheat contracts have been the leader from the beginning, and they're the most mature in this move. But with the dollar doing what it's doing, and countries looking to defend and hedge against inflation, and the commodity indexes where they are, you got to look up on wheat, because unless corn breaks, why would wheat go down? I think you got to look at this as a floor, and anything above 580, we're really bullish on Kansas City wheat, and I don't see any reason to change that. Let's back out and look at the weekly. Sorry, it doesn't look that. Yeah, look at that. Weekly chart is just now approaching the what is that? The 2018 highs. We get above that. We've really got no resistance up until this. We got a little bit at 610. Which is what we're working on now. But we close above here. We've really got nothing. We've really got nothing below $7. So technically, this thing is set to run here as well. There's no divergences on your weekly charts. So remember, anytime you're looking at technicals, the higher the time frame, the more weight it gets. So even though on the daily charts we're a little bit weaker down here, on this weekly chart, a weekly close above 6 is a really big deal. And even a sell-off is a buying opportunity, because you got to assume you're going to re-challenge it and probably break it and take out new highs. So I see no reason to be on the sell side of wheat here either. In fact, I think we're looking up. If we break this 610, 615 level, I think we're looking up to $6.75, $7 before we really get into any territory that might have a sell opportunity. So yeah, wheat is long, beans are long, corn is long. I see no reason not to stay in that mindset. So Okay, that's almost 20 minutes. I'm sorry if I was rambling. Again, I looked at these cold because I wanted you guys to get a real authentic feel for exactly what it is we're looking at. Um, I see no reason to do anything in marketing other than be patient, wait, and continue to hold. Um, Psychologically, it's really hard to stay in a winter, which, if you're a farmer and you're long, you're in a winter. It's hard to stay in that because you have a fear bias of wanting to bank it and not let it get away. Everybody's subject to that. There's no question. We just, nothing about this is telling us to be on the sell side on December 31st, 2020. We'll see how we open next week, and we will have a regularly scheduled market chat then. And I will talk to you next week. Have a happy new year. And remember, there is always risk in trading futures and options. You should not trade beyond the level of which you feel comfortable and that you can financially afford. And everything in here is my opinion. I have no control over the market. All I can do is read it and give our best opinion and work for there. Every farm is different, so make sure that you are taking positions that are in your own best interest. Have a great day. I'll talk to you next week.